Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
The market went nowhere, but a lot of other things did move. So what were they? It's Tuesday, February 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. So we're going to banana boat our way through this hour here as we wrap up the futures trading day. SMCI earnings out here after hours. We'll get to that shortly. Just to quickly put a bow on the conversation from last call, we can share the screen right away. Dylan, when you're on vacation with your best pals, sometimes what you do is you rent a tube, an inner tube with your friends. Ryan, if you could please share the screen here, just in case people don't know what a banana boat is.
I stand by my assessment. This thing is a floaty.
You go banana boating. And I remember this being a big thing in New York media at the time because Carmelo Anthony was like, yeah, there was no way I was getting on that banana boat with those guys. And he was our New York Knicks star. But banana boat trips aside here and salting the road, this was a road that really led to nowhere for stocks. S&P's down by 0.25%. The Nasdaq's down by 0.25%. The S&P is up by about 0.06. The Russell here lower by about half. The Dow Jones higher by 0.3%. The tariff talk continued as we go into today. The Tuesday session, obviously characterized by Fed Chair Powell's comments on Capitol Hill, testifying to the Senate committee today. He'll be in front of the House tomorrow. We do have a Trump press conference, more commentary on foreign policy. Maybe that's a driver behind what we're seeing in energy markets today. But oil, natural gas prices do trade higher. U.S. yields are up across the curve. We ultimately see gold, silver prices, they come back in, and the dollar, broadly speaking, lower on today's session. We can actually talk about perhaps the most interesting story here because Tesla is the one falling out of bed. I'm waiting on SMCI. And now we have the boss back in the channel. So Ryan, if we could get Sosnoff out, please. Dylan, if we're taking a look at Tesla stock here today, you mentioned that you're seeing this as a potential dip buying opportunity for share that were down 6%. Yeah. So what's your look here? Why do you think this is a dip buying
I love to
opportunity?
sell a spread. So it was a put spread, nice and little, and probably not 40 odd days out. But just something to get some long exposure to Tesla in the face of everything that's in front of us here, which is purely just a bet on my own, putting my money where my mouth is on the corrupt relationship between Elon Musk and the U.S. government and the benefit to his companies.
So sure, let's keep that in play as an idea here. What's with the Tesla underperformance recently? Yesterday you and I were talking. The three of us were texting after the show.
It doesn't. If it trades on its earnings, then it should go lower.
Is this also a play, perhaps, because of what's going on? Elon Musk's attention's divided right now. He just spread too thin. He can't pay attention to Tesla. This is obviously a stock of great interest. I still have XLY call spreads, which of Tesla is a significant portion. So Tesla going down doesn't do me any favors necessarily in the short term. But why now? I mean, why is the market now rejudging Tesla's share price after what's clearly a hand-in-glove relationship between him and the president?
You're asking me?
Yeah.
You're asking both of us? I mean, I think the obvious why now is where you kind of alluded to it, which is Musk is becoming ever more deeply involved in the day-to-day activities of the Trump administration, apparently living in Washington, D.C., if you were to believe the mythology. He's sleeping on the floor of the Eisenhower executive office. That's probably not actually the case, but metaphorically, it certainly appears to be the case. And the degree to which the Tesla boss is consumed by the Trump his interest and responsibilities in the Trump administration it means he's spending less time making management decisions, one presumes, at any of his companies. Most importantly, Tesla. Now, one could argue the most valuable place for the boss to be is not making day-to-day decisions at any of these companies, but rather at the side of the most powerful man in the world, currying favor for massive future advantages. Although the degree to which that was hoped for based on the sort of immediate post-election run-up that is readily evident in this chart, obviously is being viewed more pessimistically now, insofar as it obviously is an expression of Elon Musk's basic massive distraction or even total disinterest in any of the operations at Tesla. Or it's real, or it has nothing to do with any. That's one possible answer. The other is Tesla is, for whatever reason, increasingly trading based on the number of cars that it sells, rather than on the ability of its biggest shareholder to gin up abstract future growth prospects to justify an outrageous multiple.
There's
one other thing,
yeah.
Which actually was I was thinking about, but even before I bought, the thing that most gave me pause to at least stay small with the Tesla long position is the idea that full self-driving, which is obviously the sort of holy grail of the Tesla automotive platform. There was somebody I read. I don't know who wrote it, so I can't give credit where credit is due. But it made sense when I read it, which is that by the time full self-driving at Tesla comes online, shortly thereafter it'll become a universal feature at every car maker. Excuse me. So the idea that full self-driving is a massive point of differentiation for Tesla relative to every other car maker, which I think was a central part of the underlying valuation thesis for Tesla. That the argument that by the time it happens, it'll quickly become commoditized and everybody will have it, which struck me as something that certainly has some potential truth to it.
You mentioned this Tesla right now facing the reality of what's happening with its balance sheet effectively. Is it selling enough cars right now? Before we go into the AI conversation and thinking about perhaps the OpenAI story as it pertains to Tesla's share price movement today, looking over at FinViz, you mentioned Tesla's beginning to disappoint. The earnings, EPS trailing 12 months down 52.8% year over year. EPS quarter over quarter is down 71% from the most recent earnings report. So earnings growth, wrong direction, and they already have a PE ratio that's still astronomically high. Their forward PE ratio still astronomically high here. So there was this discussion point, is this another situation like with Twitter? Like, for those whose memories need to be jogged, when Elon Musk initially said that he was going to buy Twitter several years ago, how was he going to do it? He was going to have to sell some of his underlying ownership stake in Tesla, perhaps, or he'd have to borrow against it. Find someone who was willing to let him borrow against the shares to get the loan to buy Twitter. And so you had this song and dance where, okay, Elon Musk's attention is going to be divided. He's going to be using Tesla's balance sheet to purchase Twitter. As a Tesla shareholder, do you really, are you buying the company now because Twitter's a premium to the share price, or is it added to a discount? There was an albatross for a little while there, if you will. We had a talking point like Tesla has a Twitter problem, right? With Elon Musk buys Twitter, will the CCP and other organizations, other companies lean on Musk, other countries lean on Musk to, potentially take down free speech in that country so that he could keep his business operations open there? You could say in hindsight that wasn't an issue. I'm actually going to go the other direction and say I was proven 100% correct. Elon Musk is not critical of the CCP at all. When he says he's respecting free speech, he said he's respecting speech within the confines of each territory's laws. It's not a principle like anyone can say whatever they want, wherever they want, whatever they want. You can say whatever you want, whenever you want on this platform, so long as the government's okay with it. And that's been the approach in China, and that's been the approach in Turkey, and that's been the approach everywhere else. So Twitter hasn't been a problem for Elon Musk because he's complied. He's letting Twitter not be an issue and get in the way of Tesla. But if we're going through that same type of market misunderstanding right now, where we think this is an albatross, then maybe the OpenAI news is the reason why Tesla's down today, because it's a new shiny object.
And that's where I was about to go. Yes.
Right.
But
Because
how many times has Tesla sold off and rallied back in a bigger, better, badder way? I mean, every effing time.
That's kind of where
Every
we're rounding
effing
on
time.
to.
Well, not
So, like, I have my
yet
own-
because it's lower today, and
No, I
not the day
understand, but
before
I'm
because it's
thinking back,
lower then.
I think it was December 22, maybe, right when
Well, right. So
Twitter.
this is the timing thing, right? So this becomes a question of is this
Fair.
is tomorrow the day that it bounces?
So why don't I go with the old Spivak nibbler and just take a little here, take a little
like that.
later, take a little more
I like it.
later.
I like it. The Nibbler Classic would demand that there be some sort of an attempt to set a low, and we've not seen that yet. So for me,
So you're saying
there
the first
isn't
nibble and the nibbler needs some catalyst.
some catalyst. Show me a green candle. Show me some sign of technical defense emerging, and off we might be going. But I think, Chris, to your point, this is exactly what seems to be lining up. You have this situation where obviously Elon Musk is increasingly taken with whatever he's doing to support the Trump administration, and in the meantime trying to make a bid for OpenAI. So it's not like he's completely distracted from sort of other Elon Musk endeavors, but he is met with resistance from another Trump administration favorite. I mean, we just saw Sam Altman and SoftBank
So what's the
standing next to the
OpenAI
president.
argument against? Why would the OpenAI beef drive Tesla in the tank?
Well, what I'm kind of trying to tell us, a story that kind of mirrors what happened with Twitter, because while Twitter ultimately, in the early days of that news being out there, was something that hurt Tesla's share price, obviously in hindsight, the story itself was incomplete, because if you decided to look long Tesla on the basis of Musk buying Twitter, you caught the tailwind of that in November and December this year, when the share price shot up 92% from its pre-election level to its highs in the middle of December, right? So did Twitter help Elon Musk get Donald Trump in office? Yes, I think so. But that's not really the story here. The story here is, why are we slouching off today? If it's the initial, Musk's attention is divided and this is going to cost him his personal fortune, he's going to have to loan out Tesla shares and yada, yada, yada. We've seen this story play before. It's going to maybe take a day or two or a week or so for this to wash out. But does he even want to buy OpenAI in the first place is the question we have to be asking ourselves here. Because if he doesn't, then why are we even caring that this is the news that's driving Tesla down, which is to say that, is this being totally ticker agnostic given the news flow? Are Dylan and Radigan is Radigan, Sosnoff, and Batista all correct in saying this is a buy the dip opportunity? Because I think the answer could be yes, for another different reason.
It could be if it's confirmed, but for now, it looks like a very stretched thin executive is muddying the waters for a competitor. And if you were to rank the priorities and say, what is Elon Musk thinking about today? Some of it is Doge. Some of it apparently is trying to poke the eye of Sam Altman and OpenAI, to very deft response from Mr. Altman, and spare a thought for Tesla. Nobody's saying a word about it, even as its sales look not all that awesome. And so
I think we're missing
where is his head?
Right? If part of the process of getting OpenAI, so like the big story here, Sam Altman's removed as the head of OpenAI. And when that board removes him, as he returns to power, he slowly replaces the board. So it's people who won't kick him out of his job in the future. And he wants
as you might expect.
He wants to transition the company from nonprofit to for-profit. Now, because of California, United States laws, for this to happen, we have to assign a fair value to the assets that the non-for-profit has. And the way that this is all working out, that Sam Altman's going to be able to buy these assets with a for-profit company from the nonprofit entity. Where do you value those assets at? At an arm's length transaction in the marketplace, of course. Who just set the price for Sam Altman to build out OpenAI in the manner that he wants to do it in? Elon Musk. He just made this unsolicited bid. He just said this is the market value for those assets that you're trying to spin off from your nonprofit into your for-profit, which complicates things because Sam Altman wasn't trying to do that for $97.4 billion. He was trying to do that for about $40 billion. So now he's got to raise a little bit more money here to accomplish this goal, or he's going to have to go back to the state of California, to the IRS, and explain this is why we did this transaction. This is why the nonprofit took less money for the assets that it held. That complicates things. I don't know if Elon Musk actually wants to buy OpenAI. I think Elon Musk wants to prevent OpenAI from hitting that takeoff point where exponential growth kicks in and they reach AGI first, and then there's nothing left for anyone else, because it is a race to build the machine god, as we keep calling it, right? If we're trying to get to AGI or ASI, artificial superintelligence, once you get there, everything else may be subsumed quickly, because that in theory will have more intelligence than the sum of humanity and all of humanity's knowledge put together throughout history. Be smarter than everyone else.
AI is behind the ball.
It may be behind the ball, right? But if it is behind the ball, and this isn't a legitimate attempt to buy the OpenAI's assets, what are you doing here? You're slowing down the process.
Yes.
From it acquiring the resources to reach that breakneck speed so it can move out further ahead of the pack. Mm-hmm. So if that's the case, Grok AI getting killed is bad for Tesla, because that's Tesla's AI system that it wants to use long term. If Grok AI falls behind, it makes that piece of software, that asset, less valuable for Elon Musk moving forward.
Can I ask a question that just a philosophical question?
Mm-hmm.
The world's smartest AI or super intelligent, what's the definition of smart in that context, or intelligent? In other words, what if the intelligent conclusion is end all human life? Is that the smart? Is that considered smart? It's smart by whose measure?
Therein is
the Matrix
debate.
I mean, what is the definition of smart in this context?
Well, I assume we're doing like the Isaac Asimov robotic ethics, where we do no harm to people kind of training.
Well, and in a sense, the Musk-Altman dichotomy is very much a part of this conversation. OpenAI and Sam Altman have clearly been advocates to say, let's keep building, let's keep developing, let's keep shipping, let's keep releasing. This is how we are going to get more and more people to define what the right guardrails are. Whereas Elon Musk had said, whoa, hold on, slow down. We're going to build the robot messiah here, we think, but it might kill us all. So why don't we slow walk this more? So there's competing visions. Was it the Trump
executive order today to lift all guardrails and just say, autonomous agents and murder drones all around kind of thing? See what happens?
Sounded like it.
Like, in other words, I thought that the Trump administration's posture was, who are we to regulate or to create a moral code for AI, build the biggest, most smartest, fastest, most amazing version of it, and if it does bad things, so be it.
Well, and in this sense, the sort of sniping between these two guys, both of whom are in Trump's orbit, both of whom are doing business with the administration, really seems to highlight this. They might be at this point almost as children fighting, and dad saying, you know what, let them fight it out. Somebody's going to get a black eye, and that will be the one that doesn't prevail, but you all go ahead. Sort this amongst yourselves.
I'm
It's a
buying
problem.
Tesla.
Well, that's
Between now and the murder drones, I'm going to
TLDR.
I'm buying some Tesla stock. I'm going with the Spivak nibbler, even if it's a little early to nibble.
so there's the Vecchio ape shitter and the Spivak nibbler.
The Vecchio ape shitter, that thing pays big money. When you catch an ape, I've only caught one ape shitter in the last 2 years.
It's been a good one, though.
It was a damn good one. I'll never forget it. Jobs report, October 2023, Friday morning. It was a beautiful day. Got the full ape shit. It was like a Batman signal.
Yeah. When I lay in bed at night, I look at the text. I'm like S&P 4236. Like, oh, what a good buy. What a great buy. Still chasing that high, Dylan. It's just
most people either watch Instagram reels or porn, and you're watching your historical your entry points on your S&P trades before you fall asleep at night on your phone.
I'm watching Futures Power Hour from that Friday.
From 2 years ago.
Yeah, Dylan. So look, as Elliot points out, this is I'm trying to signal from the noise here, right? Because the technicals look terrible. If this wasn't Tesla, and you're looking at it from a pure fundamental perspective, you'd say, oh, German car sales are down 50%. Yeah, and China sales are down 11%. And, ever since he was up on stage pouring his heart out to people or Nazi saluting or whatever you're interpreting it as.
Whatever that thing was.
Apparently there's a
when was the Nazi salute? Was that the top?
20% ago. It was actually, that was at the inauguration. So we open up here. That's the open. I could suppose we want to measure it to the close on the 17th. So 426.50, this event is on the 20th. But ever since then, right, there are websites that have been tracking Tesla sales in Germany, France, Italy, Norway, and they're down double digits over the past 3 weeks on a year-over-year basis. And they fell off starting January 20th. So the share prices are down. Coming into today, we're down 18%. We lob off another 6% today. We're over 30% off the highs here. We could talk about him eating the EV competition because of all the tax credits getting removed and no one else is going to break into the space. But maybe Dylan, you're right. Maybe the people are paying more attention to the fact that as a car company, the numbers are moving in the exact opposite wrong direction. That said, if this is related to anything OpenAI, it doesn't look like
full self-driving could become a commodity. I mean, within a few years of its invention.
Yeah, I mean, look, if that to me is the whole reason why Musk is backing Trump. Trump says he wants to cut red tape. Harris and Biden were all about slowing things down, environmental reviews. Let's make sure that this endangered species of butterfly, isn't going to be wiped out in case. Well, actually, let's not exaggerate here. They needed to do a multi-year study on what happens if some rocket fuselages fall back into the ocean and they hit a whale. And that was something that the government asked them to do, which should we worry about killing marine life when we're doing our stuff? Sure. But statistically speaking, a rocket tube falling into the ocean and killing a whale, sorry, that's just one unlucky whale. It just sounds
like they're fucking with him. I mean, that just sounds like they're fucking with him.
Right, but if I'm walking down the street and a meteor hits me in the back of the head and kills me, tough shit.
Tell you what, go and figure out what happens if this thing should hit a whale.
Yeah.
I'll see you in a few years.
Yeah.
So if you want to get to Mars,
if this thing hits a whale, we should play the lottery. I mean, the lottery's got to be better odds than a fuselage hitting a whale.
But that's kind of my response too. No joke. A few months ago, I pulled 3 blue M&Ms out of an M&M pack. And I'm like, holy cow, this is crazy. Because if there's one blue M&M out of every 30 and I just pulled 3 in a row, the odds of me, okay, I got to go buy a scratch-off ticket. And I did, and I didn't win any money on it. But you kind of got to live in those probabilistic terms. If you're going to be a trader, you don't think
maybe you should have tried to throw something at a whale.
Right? Better shot of landing on a whale. So Musk wants this deregulation kick is the point we're getting at. He wants to be able to go to Mars quicker. He wants to be able to send humans into space quicker. He wants the Neuralink technology to be pushed forward faster. Does he want OpenAI itself? Maybe, but maybe he just wants to slow down OpenAI so Grok doesn't lose ground and ultimately it doesn't nullify the immense value that Grok AI has been providing to him and his company. It's ultimately going to be the bedrock that Tesla AI rests upon. So he needs it to be the best, and he can't. If a company comes out and says, if GM comes out and says, hey, we're going to be using OpenAI's AI AGI in our cars moving forward for self-driving vehicles, Tesla becomes all of a sudden just another car company that's struggling. So we're not there yet. It's a long way to go. It's worth point of discussion here today, maybe for half the show, because it's a market that doesn't really move otherwise. We talked about it at S&P. We gap open lower at DeepSeek Monday. We open up there at 6102. We're at 6092 right now. The S&P today churns, twirling towards freedom. The Nasdaq off by 0.25%. A bit of an inside day. We're off the lows, but we don't push up to new weekly highs. Ilya, you've been very adamant about this being a range-bound market. Can you please give your typical 45-second disclaimer on if you're short from the highs or long from the lows? Sit on your hands.
I mean, that's essentially the only thing to look at here, and I remain completely unrepentant in that assessment. There is nothing that's going on here, and vol is not even at 17. So there's no premium to extract in a sideways move. I mean, I guess you could play for vol expansion. That's about the only thing you could do here. But why would you? If you're already long from near the bottom of this range, you haven't been proven wrong. If you're short near the top of this range, you haven't been proven wrong. So what's there to do here with no vol to pull out of? Really only selling an iron condor and look for the vol to open up. But how would you time that? Difficult to say. We've been in this sideways range now for going on 2.5 months.
Dylan, you have any strong feelings about the headline indexes here not doing anything of much recent?
No. I mean, I look at it as a positive, actually. I look at it as I look at this more as a failure to go down. Like you can look, the thing with a flat line is you can look at it as either a failure to rise or a failure to decline.
Right.
And in my instance, I think that there's been more reasons for it to go down than to go up. And so for me, the fact that it hasn't gone down, it's like sideways is the new up in the era of the Trump administration. And as long as the market can even tolerate the level of rhetorical madness, which the reason it can tolerate it is because obviously the policy aspects of it are pretty ambiguous or non-existent. So, and it's part of the reason why I think Tesla is a nice stock to buy.
Dylan, can I revisit a thesis we threw out on the Monday of DeepSeek Monday?
Yeah.
That if this was moving into a phase 2 AI space, then we would see distribution within the headline index for a little while, because the heavyweights that carried us here were a lot of the phase 1 names. Mm-hmm. And as we change leadership batons, it means that there's going to be a bunch of churn in the market. Mm-hmm. And so if phase 2 is here, then it should be a lot of sideways chop before ultimately resolving to the upside. Mm-hmm. We are at the opening levels there still. We're at 60.90.5 right now. Again, we opened up DeepSeek Monday at 6102.25. 10 points in the S&P at these levels is, that's nothing. So I'm with you. It feels like right now there's still good distribution in this market. The breadth obviously is holding up, all things considered. Names like NVIDIA are starting to pull back in and rebound. It would be very helpful if a name like Tesla started to participate. That's doing no one any favors at this point in time. Mm-hmm. But I look at this setup right now and I see we're still hugging our moving average envelope. The moving average envelope is still pitched higher. We have that nice intraday recovery off of the 1 month moving average. I got to stay long here, Dylan. It's not comfortable being long. Feels like there's a lot of false starts, but it feels like that's where the balance of risk lie. Like we're taking and absorbing all these body blows. And I suppose, Ilya, tomorrow the only thing that would be a problem is CPI. Although you said something today on Futures Power Hour about CPI. You're less worried about the market reaction if the print is hot. You're more worried about what it would be if the print was cold.
That's right.
Why is that?
We'll take a look at ZB here because I think this is the picture that means 1,000 words. Take a look at the bottom. That big green candle, that's the last time we got a CPI number. And it came in only a little bit cooler, just a bit. And the markets went, whoa, okay, hold on. And then the other big green candle was last week. That was those very surprisingly soft service sector ISM and S&P Global PMI numbers that told us the one part of the economy that is strong, the one part where inflation then is locked, and the one part that is absolutely essential for global growth because nowhere else is there any kind of economic vigor, that it's weak suddenly. And the weakest in a year as far as the pace of economic activity expansion. And so the only other sort of comparable day in this entire sequence is that middle green up candle that punches through the moving averages envelope, and that's DeepSeek right there. So this entire rally, this 8-week high that we hit on the bonds and commensurate an 8-week low that we hit on yields last week came together really over the course of 3 trading days, of which one is the DeepSeek shock, which never really withered away in bonds like it did in stocks. But the meat of the move is 2 days, CPI and PMI. And all of it is telling you either one of two things. If you want to listen to Fed Chair Jerome Powell tell it, it's telling you that uncertainty around the rates outlook is ebbing, which means the term premium is cooling, and that is why you have lower yields and higher bonds, because that's coming out of the equation. I mean, okay, maybe that's a cute interpretation. It doesn't seem like it's the likely one when you look at, in particular, the response to the PMIs, which were very weak, and what the front end of the curve is doing, which is nothing, implying that indeed the Fed is gradualist, it's not going anywhere fast. This seems to anticipate that, much like we saw at similar juncture last year, around mid-April going into May last year, that a Fed resistant to easing in the immediate is being judged as likely to ease more later. And when you see that kind of price action and that kind of a signal come out of PMI data that's exceedingly weak and surprisingly weak, the upshot seems to be the Fed should be easing now in the market's eye. They see some sort of a cyclical concern somewhere 6 months, 9 months out. They think that delaying now is the wrong move, and they think it'll be more easing later. If that's the interpretation that the market is in fact giving us, then if you get a soft CPI number here, much like you got a month ago, the response would be, oh, well, there's that cyclical concern. If stocks come off on a weaker CPI number, whereas they should be cheering because it means the Fed might get to cutting sooner in the sort of older paradigm. If they haven't heard Powell pound the table on we're not going anywhere fast for weeks now, including today, and if the response to a soft CPI number is, okay, there is a cyclical thing that's not going to get addressed until it's too late here, that'll be a very different read. It's not a 0.3 month-on-month CPI that I think is the most concerning to our conversation from Futures Power Hour, whereas the baseline is 0.2, and that would be even keel. It's something that's lower, 0.1, 0.15, even 0.2 0.21 or 0.19, something on the low end of normal. That already would be something interesting if stocks were to take it as a bearish cue.
Rates are at the line in the sand right now. The uptrend from the September, October, December swing lows that we started to break through just last week, we're right back up against it. We're kind of poking our head through it today too, except for the fact that the 1 month average of rates, that's there sitting at 4.534%. We never quite scaled it on the close today, sitting at 4.532. But it's pretty darn close. So you talk about CPI day arriving when the market is more or less trying to pick a direction. This could be the affirmation that rates are now heading back up after what was a false breakdown here, or this is the retest. And we're going to head right back down to the 4.4% level. And this is merely the breakout return before we reload and then swing to maybe 4.15. But getting rates lower from here would be exceptionally helpful for a number of different things. It feels like that's very much an oil story, though, because as oil's rebounded here the past 3 days, that's when yields have abruptly turned around. Still, and it's a 6.6 IVR, so this isn't really worthy of discussion from a tasty trader perspective. There's not a lot of vol here to sell, if you will. Better opportunities on the board elsewhere. But oil continues to move up. Trump's talking about a potential peace deal with Ukraine and Russia, how he's sending Treasury Secretary Scott Bessent over there to negotiate with Zelensky for U.S. protection in exchange for access to rare earth minerals, it seems like. Zelensky is out today suggesting that they are open and willing to talk about land swaps with Russia, territory swaps with Russia. Dylan, are we looking at the oil move from the start there?
The selling, I don't know. I mean, I'm a little bit. Yes, the answer is yes, we could be. It's less black and white than I'd like it to be. How do I say this in a way that makes sense? A degradation of the Hamas situation or the Gaza situation, which seems entirely plausible, would seem to be a more meaningful trigger to run oil higher that then would be a chance to sell it. And I think, and the reason I hesitate a little bit is I feel like there's a reasonable chance of a further rise in price before it goes lower, as tied to the plausible short-term emergence of a degradation in the Middle East, to speak with all sorts of colloquial and sterile words. But
and after the presser today with the king of the king of Jordan, that's, I think, a path that makes a lot of sense.
Yeah. So I think you're good to watch, but I would wait for a little bit more chaos out of the Middle East and then sell it.
I got, as we talked about earlier, Chris, I got out of my short here today and took profit. It's been a lovely ride from 77-ish to here, and I'm good for now. I took this off earlier today for exactly the reasons that Dylan is outlining, and of course the technical damage done. We're back into that congestion area. We're really on the last line of former support become resistance type of a defense. If we find some sort of a conclusive evidence of a turn back down, I want to be a seller. I expect, though, that Dylan is right, and we do see some degradation in sort of the chaos premium in that theater, and so we get some sort of a further bounce, but ultimately there is no desire for a bilateral Israel, Iran, or U.S. plus Israel versus Iran conflict. And so ultimately the thing fizzles. And I want to be a seller, just not at this very second.
Dylan, you raised a really important point yesterday about, like, how does Trump work? Trump likes.
You mean the door in the face negotiating premise?
That But what you said about how he likes being in the center of attention,
Oh yeah,
you
yeah.
know, his deadline for the hostages to be returned, lest all hell break loose, is this Saturday at high noon. That means that we as market participants will be paying attention to the news flow over the weekend, because if the hostages
And
aren't
then
returned
oil
on
should
Saturday,
remain bid into Friday. It's hard to see how oil doesn't remain bid into the weekend.
that's kind of what I'm getting at too, right? Like if we're thinking about how to play oil here, I see a 6.6 IVR and I go, oof, would I really want to fade this from an options perspective here? And taking a step back, we have these conversations. Sometimes this is directed to the audience, so you can understand how we work through things as traders, right? So we have a 6.6 IVR. Looking to capture any volatility here to collect premium, you got to be really careful about how you do it. If you want to fade the oil move to the upside, are selling calls, is that the best way to go about this? Well, knowing that we have this high noon deadline on Saturday, a day when the markets are closed, is there a chance then that if that deadline passes and Hamas doesn't return the rest of the hostages, that Trump green lights U.S. aid or Israel to resume bombing? What if Iran says, oh, because Israel started the attack, you get some headlines about some missiles flying there? What if the United States decides to go after Iran directly because the deadline's passed, and they say, you know what, Hamas, we're just going to deal with your boss, and they just go straight to management? They pull the old Karen card, and we go start going off of Iranian military infrastructure instead to kind of send a message. This is the president that killed the Iranian general back
Soleimani or whatever.
Soleimani. Yeah, right. Like at the start of 2020, and that quickly went out the window because we were all then thinking about COVID a few weeks later. But if I'm trading oil,
Tehran has not forgotten, by the way.
Am I selling calls? Well, yeah, there's still a price tag out on Trump's head and on John Bolton's head
and Mike Pompeo too.
Mike Pence, right? The Trump administration from the first term.
Yeah.
Anyone tied to foreign affairs, basically. So the point I'm getting at here is, okay, would I want to sell calls in a market where there's low volatility facing this geopolitical event risk, heading into a weekend where there is a deadline for something that could dramatically cause a dislocation in price while I have no ability to manage my position? So I'm not where's my wrong button? So if you're shorting this, like you're doing it short, like MCL, you're holding it short. If you're going to be short through options, they're much longer dated. That way, if anything happens this weekend, you're not looking at yourself staring down, oh my gosh, this expires Monday. Now I'm $4 underwater and I'm short a bunch of calls here. That's probably not the smart thing to do. Dylan, you packaged all of that into the one eloquent thought, which was, am I interested in selling oil? Yes, but I think that there's a potential for further price expansion, so I'm not going to do it here. I think finally, oil, we have a reason to, I don't want to say anticipate geopolitical risk. Oil prices could move up without the ensuing vol expansion, but trying to fade this bounce the last few days, that may prove difficult given the news flow that we have ahead. And so I'd much prefer not to do it still, and I'd much rather stay long deltas in energy here than look to fade any price movement that's offering very, very little by way of premium selling.
I mean, the tragic situation, though, is let's assume that there's a deal over the weekend, which hopefully there is, then oil will be, I would think, flat or lower on Monday. Let's assume there's not a deal over the weekend, then oil will probably be sideways or higher. And that's the point at which I would actually want to sell that's when I would want to sell the calls.
There's also like the whole notion of like what Trump's trying to achieve here. He just sat down with the Jordanian president and said like, oh no, the Palestinians are moving out. Jordanian king, right? The fact of the matter is, like, we can slice this up however you want. There are people out there who are going to look at this and say this is ethnic cleansing to a degree. There are people in the Middle East who are saying that right now, that if this plan were to go through, Egypt has talked out in strong terms. What does this mean then for regional stability moving forward? Is this just a negotiation? Is it the door in the face thing, Dylan? Or is this legitimate? Right? So that's why, in terms of fading this, this doesn't feel the way that oil did for much of 2024. Like we need to see the event come to pass and see how it starts playing out before we say, okay, well, we're $3 higher than we were, at last week's lows. This is clearly related to some of the headlines, so we're just going to fade this pop right now. I don't think it's.
I mean, the other difference is the Biden administration was very much predictably predictable, whereas the Trump administration goes out of its way to be predictably unpredictable, like
Yes.
as a
That is very
centerpiece
true.
of its policy. And so you're dealing with a predictably predictable American administration. For me, anyway, makes it easier to sort of anticipate. I never thought that the United States was going to randomly escalate in the Middle East under the Biden administration beyond what was already happening.
Well, and the other thing is
However, I
defining
do think
what
the
the
Trump
event is.
administration could. Sorry.
No,
No, but it's
by all means.
predictability.
I think first of all, Dylan's absolutely right. But secondly, it's the defining even what we're trying to predict, right? We're supposed to have this summit that the president talked about alongside King Abdullah earlier today, saying we're going to have this summit with Egypt. Egypt's got a plan, and they're going to get us all together to discuss this thing. And we're going to figure it out with Jordan and with Egypt and with other partners. Apparently, MBS, Mohammed bin Salman, the crown prince of Saudi Arabia, is going to get everybody together so Egypt can present this thing. And of course, Egypt is of a mind here. Gaza is formerly Egyptian territory, and they're right on the border there. So obviously they have a say or want to have a say. They also have been incredibly touchy about Hamas, which is an offshoot of the Egyptian Muslim Brotherhood, the sort of granddaddy of the Islamist organizations. If you're a student of history going all the way back to Sayyid Qutb, then they're, of course, very concerned that this is going to permeate back into Egypt, where they've been clamping down on the Muslim Brotherhood with a vengeance under the new administration. Sort of all of that kind of Arab Spring normalization of the Brotherhood is gone. Al-Sisi is cracking down on them vigorously. And so they don't want any part of Gaza because they don't want any part of that element flowing back into Egypt. So who knows what event are we trying to anticipate? The actual U.S. Entry into Gaza, or whatever happens at this summit, which may or may not endorse that view, and whatever may come out the other end. Who knows? At this point, there's a long on-ramp for oil to be worried about non-specific things over weeks at least, while whatever the shape of this thing even looks like gets figured out. Never mind an actual U.S. entry into Gaza. What the range of options on the table are is at this point in flux. But that Trump was willing to sit with the King of Jordan and have the King of Jordan nodding along while he goes, yeah, we're just going to take it over. It's going to be fine. That tells you that this is not just a bluff per se. This isn't just, we're going to buy Greenland and make Canada the 51st state. This really is the door-in-the-face technique and the theory of the madman theory of geopolitics all in one go. One would think that for King Abdullah to be willing to sit there and do that demonstrates that this is actually a part of some sort of a substantive incentive structure that's getting fleshed out. And we'll see. I mean,
you think that Abdullah knew that he was going to say that America is just going to take Gaza?
He said he was going to take Gaza before this meeting.
And then said it during the.
Trump is on the record. He said it publicly. He just did it again with the King of Jordan sitting right next to him saying, we're going to work with the administration, smiling, shaking his hand, saying, look, we're going to figure this thing out. Obviously, he didn't endorse the U.S. takeover of Gaza. He also didn't not endorse it.
Mm-hmm.
There is clearly some sort of a back of
I mean, isn't that kind of a war where if America were to take a landmass in the Middle East, specifically the Gaza Strip, as the United States, and seek to develop the Riviera in Gaza, isn't that a real aggressive move towards World War III?
I mean, it might be the Trump speak for the U.S. is going to provide security guarantees and a security umbrella to the players like Egypt, Jordan, and most importantly, Saudi, to come in and manage the post-war reconstruction and transition, and the U.S. will underwrite this for everyone. And that is how you decipher, we will come in and it will be great.
Mm-hmm.
I think people read a lot of this stuff, again, to your point, Chris. The paradigm seems to be take the president seriously, but not literally.
Yeah, it's like, okay, so he's talking about Gaza. What could he possibly want with Gaza? Like, okay, he's saying that he wants to destroy Gaza and wipe out all the people there, but like that's clearly not what he means. So like, what does he really mean? Okay, he clearly wants a Trump Tower in Gaza. Okay, that's what he's going. Yeah, we're going to play the game for the next 4 years, but
we're going to play the game, and crude oil can have an expanding risk premium in there thanks to geopolitics. Then for what? A few weeks? Because nothing is certain and nobody has no idea what's going on or what we're doing.
Yeah.
Or what the variable even is.
That, Dylan, I think you brought up the most interesting point about this. And we talk, there's a tool you got to take out of the toolbox depending upon the market conditions. Our job as traders is to identify the characteristics that define a market and learn how to operate within them, right? The characteristic that you identified about trading oil during the last administration was it was predictably predictable. There would be an attack, there'd be a response, there'd be warnings ahead of time. There's this whole song and dance. It's kabuki theater, right? We fire some missiles, you fire some missiles. We can then pump the propaganda to our respective populations that we're standing strong, and we're protecting them. And the Ayatollah saves face, yada, yada, yada.
And so the whole time oil moves and it's not a problem for anybody. Oil and money move.
Yeah, it's like oil,
and the shuffle continues.
Yeah, it's like oil's up 7 or 8% during this dance, and then the attacks come, and then the oil immediately falls off, and then you get the second wave where it's like the response, and it's just bombs blowing up in the desert. So just to like say they responded, and this happens on a number of different occasions, right? It happens in April, and we get another kick up in June, July. We get a kick up obviously in October. But when you hear these headlines, it's like, okay, you price it in for 2 or 3 days, you wait, you fade the move. World War III isn't happening. You always fade the World War III headlines. But there was a predictability there. I keep talking about relearning Trump speak because like I don't know how to speak it. And I think a lot of oil traders don't know how to either because we're not pricing in risk that could get us to an escalation point. We're just like, is this risk? What do we make of it? Is it even worth pushing the money around right now? I find oil to be the most perplexing thing. I have not placed a trade in here in months at this point in time. I've been operating mostly in natural gas, which in Europe, we're getting through the winter months, Ilya, so it's not exactly like it was a few years ago, but energy storages are running low. Demand for US LNG is ticking up. There's also an AI story here, which I kind of like, being that bull junkie, as it were. Let's just put a bow on the energy conversation. What are you guys thinking for the second half of this week? We have 3 minutes left.
Oh, what is it? What about this economic data, Ilya? Do we care? Do I care?
CPI.
Yes. I mean, I think the CPI data matters, and I think it's going to matter much like NFP. I think it's going to matter more for its passing than it is for its substance. If the story we've been seeing in markets over recent weeks is the Fed isn't going anywhere fast, Powell said as much again, and the market is looking at the data and going, the further out looking data is getting a little bit annoying, and we're going to look at lower rates downwind as a consequence. If CPI comes out and basically does nothing to append that, yields go higher or lower. At the front end, no. But at the long end, what you might see is, again, the markets go, okay, so this just endorses the Fed sitting on its hands. And really what this means is bonds go higher and the curve flattens. That is to say, bonds go higher at the long end and the curve flattens. That's probably negative for the dollar. The real question is, what do stocks do with that? Are they prepared to take a range break on the basis that there is a cyclical concern 6 months out, 9 months out? We're going to have to wait and see. Or are they prepared to say, no, we don't care, and actually have a committed rally? They haven't done that either.
We're going to have to wait to see, because overtime is out of time for this Tuesday. We'll be back tomorrow, same time, same place, every Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central, here on Tasty Live. Stick around, though. After the break, we have more Tasty coming up, Tasty at Night with Ilya Spivak and Macro Money. So we'll see you there, folks. Good luck trading.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using Tasty Live? Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Fed Chair Jerome Powell doesn't make a big splash for financial markets, but economic data may do the heavy lifting for him as we look to U.S. inflation data. That's what we're going to focus on here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to unpick here is whether we have perhaps a little bit more impetus here on U.S. Fed policy expectations and what they might mean for the broader financial universe, stocks, currencies, bonds, etc. But of course, before we do, we need to first, it seems, take a look at where we started with these Powell comments, what they meant for us, if anything, and how that could translate going forward. So the first thing that we are going to do is just take a look at the way that the markets performed in the wake of Powell's remarks. He began 2 days of testimony here on Capitol Hill. He was in the Senate first. He'll be with the House of Representatives tomorrow. The prepared remarks are usually about the same for both, not surprisingly, but the Q&A is obviously going to be different because different policymakers will be asking different things. Powell managing to deftly walk the line here today with his remarks. We talked about this on the show yesterday as well as in some of our writing here for tastylive.com, looking at the outlook for the week yesterday. And the idea was that Powell was likely to walk the same sort of gradualist narrative forward that we've heard from him at the last policy announcement. And indeed, gradualism was the name of the game. Powell said that the Fed is in no hurry to move on rates with a view to make more progress on inflation, that is to say, on bringing inflation lower. That, of course, implies that there is a higher for longer kind of perspective from the Fed on rates. That is to say, they are not looking to up the speed of rate cuts. And moreover, Powell even went so far as to say that the labor market, which was ostensibly the reason why the Fed got so dovish back in September, their concerns about it have diminished considerably, quote unquote, since mid-2024. That, of course, is a very interesting takeaway here for markets because what we end up with is essentially a goose egg from stocks. They don't end up finding a whole lot of lead out of all of this. S&P 500 flat, the NASDAQ just a touch lower. The real interesting bit here is what happens to yields. In fact, the action really has been in yields for the past several weeks. And what we find is the 10-year moves higher, the 2-year moves higher. So we get a little bit of a hawkish flavor from what Powell says, confirmed here a little bit by what we see in the yen. It comes down a little bit against a U.S. dollar that feels a little bit more muscular for yield sensitive reasons, not surprisingly, with the whole curve shifting up a bit. Gold also coming in a little, that seemingly also a part of the same story. And so you look at the landscape here, and it seems like the markets ultimately took a slightly hawkish lead from Powell, but that this really didn't translate into broader risk sentiment very much. And for their part, we can see the bonds come in a little bit as yields show that tick up, but ultimately the trend higher from these early 2025 lows here, that remains intact. Moreover, the pullback marks a retest of this former support or former resistance become support, rather. Right here about just above the 114 handle. And we stop just right there and hold. What's very interesting about this is of course, this returns us to the site of last week's breakout to retest it. And marks at this point a retracement, not a change of trend. We're still looking at a series of higher highs, series of higher lows. We're still looking at a breakout from this down move here going back to early December. So it does still look like the bias remains higher, if not for today's price action in isolation than for the structure as a whole. Moreover, we've talked about the possibility that what this looks like is a head and shoulders pattern, where this is sort of a classic technical bottom, shoulder, head, shoulder. And if you believe such things, or at least if you were to take such things as a kind of self-fulfillment mechanism, that in my mind is how technical analysis is most potent, where everybody is looking at the same thing and trading on it as though it has meaning, and because it is then reflected in the price action and those actions actually move markets, well, then it has meaning whether it had it implicitly beforehand or not. The important thing is that the markets act on a thing and make it so. If you were to consider that here, then shoulder, head, shoulder with a neckline, again at this level just above 114, gives you an implied up move back over here into the 120 area. And so we were seemingly retesting the dividing line that confirmed that pattern here, but holding it perhaps to leave open the possibility that we're still going to see an extension upward. Now, for their part, stock markets remain listless. As we've sat in this range since early December, so too we remain, and in fact, the swings have seemingly coiled up even more. Now, in the wake of these Powell comments, we end up with Fed policy expectations that reshuffle slightly, but are ultimately unchanged in the grand total. So 54 basis points being baked in this year and next, 34 basis points for this year, which amounts to almost the 2 cuts that the Fed had in mind when it made its prognostications in December. We can see that here. The Fed anticipated that it would go from 4.4 to 3.9 on the median for the Fed funds rate. Of course, it is set in a range. So if 4.4 is the middle point between 4.25 and 4.5, which is of course where markets ended up, then what we're looking at when we see 3.9 is 50 basis points lower. That is between 4 and 3 and 3/4. So if this is what the markets had from the Fed, 50 basis points in cuts this year, and then down to 3.4, so another 50 basis points in cuts for next year, that's 100 basis points through the end of 2026. And what we see here is the markets are at about half that and have been at about half that, with this year leaning in the direction of maybe 2 cuts, and next year maybe 1 cut, but the outlook for this year looking light, and increasingly that second cut being pushed out into next year. Now, that's, again, a little bit more hawkish, but we can see that the markets have been very stable in their assessment. So there's not been much movement on this front. As a matter of fact, we can see that once the Fed had that very dovish September announcement that Powell was referencing today, the markets very quickly looked at it and said, yeah, that's way too dovish. That's not going to happen. The economy is too hot. Not to mention the November 6th election result gave us the ascent of the Trump administration, which the markets judged as likely to be a tailwind for inflation, both on growth grounds, lower taxes, in particular lower corporate taxes, and deregulation, in so much as they tend to boost growth, but also tend to boost inflation. Moreover, the markets were very clearly concerned that you might see the tariff piece of the Trump administration's economic agenda, as well as the immigration piece, to the extent that it oversees a large deportation effort and thereby disrupts labor markets, that these things would be basically a sales tax on imports and an upward shock on the price of labor, and therefore on the price of doing things with labor, which is most things. And so that would be inflation on top of the growth-geared kind. So with all of that, the markets already by November the 7th readjusted to a much less dovish view of where rates are going. And we can see since then, we've only just tinkered around the margins. So we went a little bit more hawkish of this in the December announcement, when the Fed essentially made official its revision on rates. We can see in September, the Fed thought from 4.4 to 3.4 in 2025, and then down to 2.9 already by 2026. At the December revision, 2.9 is nowhere in the outlook, not even out to 2027. So we can see that where there was 3.4 as the destination for this year, it's been pushed out by a year to 2026. So clearly, the Fed endorsed this adjustment. And since then, very little has actually occurred. And so looking at that in context, and of course hearing Powell endorse it again and the markets listen again and go not very far at all, the question then becomes, well, then what's this rally in yields all about? Or rally in bonds, rather, sell-off in yields, all about. And why is it occurring when, in fact, nothing has really changed for the Fed, and Powell just reiterated that it probably won't anytime in the immediate future? Well, this then comes down to what we were just discussing and on the show yesterday, and really the makings of this rally. We just said that the way that this head and shoulders would-be pattern came together was last week with this breakout, this green candle right there. And as a matter of fact, if we look at the meat of this rise, it's really only 3 trading days, and of those 3, really only 2 that make up the bulk of what's going on here. Consider, this pop right here is the previous month's CPI report. That's what forms us this low just above 110. This right here is last week's PMI reporting, and this bit in the middle, which ultimately ends up with some digestion and not much forward progress in its immediate aftermath, this is the DeepSeek news, where the markets clearly took a bit of a risk off tilt, and that of course helped bonds higher. But it's really these 2 candles here that account for the meat of this entire rise. Now, the explanation that we heard from Fed Chair Jerome Powell today, again, by the way, he said something similar after the Fed's January meeting at that press conference, that the rise in long end yields, that is to say, this, is more about risk of uncertainty downwind, that this is not the Fed, that what this is what he called term premium. That is to say, the premium that investors demand, the extra income that they demand, the extra yield that they demand, for lending at longer dated maturities. That is to say, because there is uncertainty about where the correct borrowing cost level is as you go out in time. Now, sure, maybe that's not an unreasonable perspective, but of course, the question then becomes, well, why are we uncertain, and what kind of uncertainty is animating this? And what these moves would suggest is that as we move higher on the bond structure here, it isn't so much easing uncertainty as it is a growth concern that seems to be emerging. And that's because this move right here follows that CPI number where core inflation came in just a touch lighter than expected, but more importantly, the breakout, last week's decisive move that we are currently testing the wherewithal of, that move came after disappointing PMI data. And what we saw there, PMI, of course, a kind of approximation of the trends that GDP will ultimately trace out, and looks further afield beyond current conditions. This is, of course, a survey of purchasing managers, hence PM in the PMI. And their job is to look 6, 9, 12 months forward and decide inventory levels and decide outlays and budgeting. And of course, that requires an opinion on the future. And what they said in the survey that was just updated for January is that U.S. economic activity growth has slowed to the weakest in a year, primarily because of a downturn in the critical service sector. And so it would seem that what the bonds are telling us here, in particular with this surge, is that it isn't so much that there is easing uncertainty. It is more like the Fed is reluctant to cut now, and the markets are saying, well, if 6, 9, 12 months down wind, the business cycle is doing this, then the Fed's reluctance to move sooner means they're going to have to move more later. And rates are going to have to be weaker. This, of course, is the perfect backdrop to be caring about this incoming CPI report. Not surprisingly here, the expectation is that most inflation remains locked in the service sector, which is why that PMI drop-off is so significant. This is very much the essence of U.S. economic growth here, and of course, by extension, global economic growth, because the U.S. has vastly outperformed every other major economy, and which is not to say anything at all about China, which has been basically at standstill since reopening from COVID restrictions. And so really the U.S. service sector is the essence of the global growth game at this point. So we can see there's next to nothing here by way of demand pull inflation from the goods side. That inflation is next to zero. Energy, that contribution has rebased next to zero, and that's why we've had this slide up in the headline. That's expected to hold unchanged here at 2.9%, but the core is seen ticking lower from 3.2 to 3.1%. That would amount to the weakest core inflation since April 2021. Now, it would be tacit progress, but is that something that's likely to get the Fed to move quickly on rate cuts? Well, hearing Powell speak, the answer is no. Now, looking at the lead-in here, the ISM numbers that we had last week, we can see the price component there seemingly endorses a bit of a down tick on inflation. That critical service sector component, that's this green line right here, showed that the pace of inflation cooled, still positive, of course, but cooled in January. There's a little bit more pep on the manufacturing side, but that, of course, is a very small part of the economy at this point. We're talking about something like a 70-20 split at this point, where about 70% of the U.S. economy is the service sector, and only something like 20% is manufacturing, with the rest falling to ag. And so we have a reasonable argument to say that perhaps core inflation cooled a bit last month, but certainly not to say that it's moved aggressively off the recent averages. Moreover, if we look at the Fed's higher frequency metrics that it likes to look at for where inflation is trending, and we're really focused on the core because what's going on at the headline is largely driven by that overlay of energy and food, and those things are volatile, and the Fed has no agency over them. So it's really that service sector core bit that matters. We can see here that, in particular, the 6-month annualized rate for month-on-month changes in core CPI, that's showing us that over a 6-month horizon, inflation is actually accelerating, or the annualized rate of inflation is accelerating. Helpfully, there seems to have been a downtick in December for the 3-month rate, and that's in part why we got the response from bonds that we did right here. But it's still a mixed picture, and not one that, at least, again, hearing Jay Powell today, gives the Fed any confidence to move anywhere quickly and with strong conviction. Moreover, if we look at the Citi Economic Surprise Index, we can see that the recent path of U.S. economic data has broadly tended to side increasingly close with expectations. When this index comes back in the direction of zero, what that essentially implies is that incoming economic data is, broadly speaking, registering in line with forecasts, that essentially surprise risk is relatively low. So chances are we land at something in this ballpark. And of course, if that happens, then the question becomes, well, okay, so that means the Fed is probably still as anchored as Powell implied. Certainly no hurry to move there. So it probably leaves policy expectations generally in this range. But then, of course, for the bond market, the upshot remains the same. That with this, what we end up with is higher for longer now. That then means lower faster later. And we get further on this move in the long end. Bonds go up, yields come in. That may well be a headwind for the U.S. dollar. But of course, the real question is, what does that do for overall sentiment? And does it ultimately get stocks off their perch here and get them to move in a direction? Now, if the upshot becomes, with relatively in-line numbers, that the Fed is, in fact, running the risk of missing the boat on cuts, and this actually gets the market animated with some sort of a cyclical concern, then perhaps you could start a move lower here if, again, stocks are prepared to worry about such things. On the other hand, if not, then perhaps you remain here until some sort of conviction emerges. Perhaps the most potent risk for markets here, which clearly opted not to get scared when Powell made the case for delaying rate cuts today, is that CPI is actually a little bit softer. And the conventional wisdom would be, oh, well, goody, it's softer, they might cut sooner. But if the market has become animated by a cyclical concern, as this would imply, especially given how we got here and what the catalysts were, PMI data most recently, then a soft result may actually end up with a more acute concern about where the economy is going, about recession winds gathering in the second half of the year, and about what that could mean for risk. Now, that makes looking at how the CPI numbers come out and the subsequent market reaction, no matter what the numbers are, incredibly instructive. If you get a weak number and stocks don't like it, well, then we know where their head is at. If you get a weak number and the markets do like it, we get that as well. And we get a reenacting of our dynamics that we saw toward the end of last year. If we get a hot number and the markets like it, well, then it is, in fact, cyclicality that's on their mind. And if we get a hot number and the markets don't like it, well, then we've learned something yet again. So the interplay between what happens with this range in response to whatever happens in the bond market, in response to whatever happens in the CPI report, a potentially defining catalyst here. Not just for bonds, not just for the dollar, not just for rates, but for risk sentiment writ large. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour Mondays and Fridays. In just 30 minutes time here, I will be on, as I am every Tuesday, with Victor Jones for The Price of Truth. Back with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it. so we do it like we do it.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Today, and today is Tuesday. We had Jerome Powell testifying today, but we'll get into some toward the market, go over some of the positions that we had taken today, some earnings. My man's with the flow. My man's hair is flowing. I see you stroking that hair, bro. How we doing today?
It's been a struggle today, at least as far as the hair. It's not a great hair day for me. But on the market, it's
be nice. If that's not bad hair day for you, bro, you're in.
It has not been wholly cooperative. It's been quite an effort just to get it to look in the way that it does right now. Sometimes it's always a wild card. It seems most of the time that it looks perfect. It's some Saturday when I have no plans. So
no, I got you. I mean, before we get into it, how are we doing today? What's new? Anything in particular you've been looking at in the market, paying attention to? How are we doing today?
I'm doing good. I caught a nice move on Vertex Pharmaceuticals. Played an earnings trade overnight last night.
Vertex Pharmaceuticals. Okay.
To the downside, it was high risk and kind of stupid, but it totally panned out for me. So I was up $400 before I could really even blink today, and that's good because the rest of the day has kind of been steady ticks down from that point. I have this Shopify position. I was venting about it earlier today with Nick, but it's burning a little bit of a hole in my pocket. I played a inverse condor on them for earnings. Just needed to finish outside of 119 to 123. It closed 123.56 today, but that was about the first time all day it was outside that range for me. We were just plinkoing around, scaring me. And then I was also
that one was what you said, Shopify.
Yeah, Shopify.
Gotcha.
Yeah, and I had planned, it was my basis was that I mean it moves, it's super volatile all the time, but more pointedly, the last 6 earnings had all had gaps that were $10 or greater. So I was expecting something similar to happen, and of course they just came in right at expectations, slight beat, but it hasn't really moved too much. It seems the market correctly priced this in. So I have 3 DTE. I mean that's including today, really. Well, I guess no, Wednesday, Thursday, Friday. Expires Friday. So I just need it outside that range by Friday. Hopefully we keep pushing higher at this point. But it seems to be channeling a little bit. So slightly scared on that front. But what about you? What do you have open? What are you eyeing? What's going on? Did we lose Arrow? Did I lose Arrow?
My fault. Kind of want to take a look at before we get into my positions, those things, I want to take a look at Shopify. I know you said you were looking at the earnings for that one. I know Shopify is one of those underlings that really popped off over the last, I would say post-COVID 2020, especially with a lot more, online services, online websites, all those kind of things. So I think we really saw it take off at that point, but it looks like it's still doing really well. I haven't looked at it in a while. Yeah, earnings before the bell today. But no, this thing has been killing it. And then the one before that what was that pharmaceutical company?
Vertex, VRTX is the ticker.
VRTX, Vertex Pharmaceuticals, nice. No, this is a really volatile one. Just wanted to take a quick look at some of these. But I don't think my side has been as exciting as yours. I haven't been looking at any earnings yet. I know last week and the week before that, looked at Microsoft, Meta, and another, I believe it was Amazon. I think I was speaking with Dr. Jim. Dr. Jim put on, we were discussing on today's assignment, we were discussing about, he has an intern, right? He has his daughter. That's his intern. She kind of, tells him which directions to trade certain things. So, I took the intern's advice and, it didn't really pan out as well as I should have, or it could have or should have. But that was Amazon. That was the last earnings trade that I had taken. But we'll get into see what earnings are coming up as well. I don't know if any is going to be interesting enough for me to want to pull the trigger on that. But other than that, brother, SPY sold an out of the money call spread on SPY. I usually like to have a position on in QQQ, SPY, or IWM just to express my overall or longer term opinion on the market. So I'll do that. 38 days to expiration. That one's kind of just sitting in the portfolio, cooking day by day. QQQ, I have quite a few things on in here, and a lot of them expired this week. A lot of the 3 DTEs, like you kind of just touched on too. But I had sold a put spread yesterday on QQQ, and then today I had also sold a call spread. So it's a very narrow iron condor now, kind of legged into it. So it's really narrow. But I think tomorrow, if we get a little bit of a pop tomorrow, there's some levels that I'm looking at. If we get a little bit of a pop tomorrow, I should be able to get out of the put spread that I sold unscathed a little bit, maybe make a few bucks on that one. But then the condor the call side will take a little bit of a hit too. But we'll kind of break down what the risk profiles looking like here in a little bit. And then I did trade a 0 DTE today, so made a little bit of money on the 0 DTEs on QQQ this morning. That was nice. Did not catch the meat of the move on that one. I mean, the market absolutely, the floor fell out. Absolutely plummeted. And it was one of those positions where I didn't want to hold it too long because this trade took a little longer to work out than I would have anticipated. And because they're the 0 DTEs, I don't want to hold them too long because they start to lose value so quickly, especially as we get closer to that expiration. So I just made the executive decision to take off those contracts, but I did leave on the one micro that I was trading a little bit longer. So this micro NASDAQ into QQQ was the same exact, idea, just a different vehicle. But other than that, that's all that's going on over here today. QQQ, micros, SPY, a lot of the indices. As you can see, I definitely favor a lot of the indices. But other than that, that's all we got today, Gus. We can check out what earnings we have coming up, and not as exciting.
Yeah, certainly.
But still some solid trades for the day, though. Overall, yeah.
Yeah, I certainly. There's earnings that have already, a few interesting earnings that have already gone off after close today that I wanted to talk about, that I was eyeing. I guess I'll start. I'll start with the big one, which is SMCI. I'm sure we have lots of people interested. Narrowly missed expectations, really kind of a nothing burger in terms of the actual earnings call itself. They are up about 9% in post-market trading. They gave, earnings are always so dangerous to trade, and it's something that I emphasize all the time. And particularly in this case, I haven't understood this recovery for SMCI for a little while. I mean, they got added to the NASDAQ and all these good things, I understand. But they're up about 9% in post-market action, and all they did was narrowly miss earnings and lower their guidance for next year. For this year, I should say.
That encompasses earnings, if you will, but go ahead.
Yeah, it encompasses both SMCI and earnings perfectly. This rocket on pretty negligible news in the grand scheme. But DoorDash also went off. They came in pretty much exactly in line with analyst estimates. EPS was on the nose, 33 cents a share. That's what was projected. Revenue of $2.87 billion. The estimate was $2.84 billion, so $30 million beat there, which is funny. I mean, $30 million sounds like a lot of money, but I guess it's pretty negligible, about 1% in the grand scheme of that. And they're up almost 6% since close. And then Lyft went off as well. And Lyft, this is where I'm kicking myself, because I let my Shopify bias play into not taking a Lyft trade. I had the exact same sentiment about Lyft as I did Shopify, big gaps in recent earnings calls, and I was fully expecting that to happen again, but I decided not to play the inverse condor because Shopify is burning me so bad right now, and I was like, gambler's fallacy, I don't want to keep falling into it. What do you know, Lyft is down 10% in post-market trading. They reported EPS of 15 cents on 20 cent per share estimates. They did beat revenue. They came in at $1.6 billion. The estimate was $1.56 billion. And they also announced their first ever share buyback program, $500 million share buyback, and this was their first profitable year. So, bad EPS miss. I mean, a 25% miss on EPS is nothing to sneeze at, but everything else there is resoundingly good news. And their first profitable year is crazy good news. I can't believe the move we're getting to the downside on this one.
Again, I mean, that just encompasses, earnings at its core. I mean, SMCI, like you kind of just mentioned, and the type of rally they're having post-market, Lyft finally profitable, first year being profitable, all this good news. And we see an extreme move to the downside. So, I mean, that really does encompass earnings season. And I think this is one of the many reasons why I'm always using defined risk strategies whenever it comes to earnings. I know I've always really, been on the side of iron condors, spreads, whatever the case might be, but I don't know if earnings have ever left a bad taste in your mouth. I would say it's not so much that there's anything wrong with the earnings. I think it's just more so going into the mindset that good earnings can have a negative outcome on the stock price. Bad earnings can have a positive, outcome on the stock price. So it's one of those things that I think you kind of just learn to accept that, the market's going to do whatever the market wants to do, regardless of news and expectations.
It's true. And it's this weird dichotomy where you have analyst expectations, and so the market moves ahead of time to price in those expectations, but then sometimes the market overprices in those expectations or is expecting a beat of the expectations. So you have two sets of expectations with any earnings call, essentially. You have the market expectation and the analyst expectation, and they fight with each other constantly. So yeah, that's why, I mean, it's not uncommon at all to get a good earnings call and have a stock move down. It's just because everybody knew the earnings call was going to be good and priced in that move a little too much. So yeah, interesting, efficient market things happening there.
Most definitely efficient indeed. Volatility still kind of dead over here, Gus. We're into the second month of the year, kind of the same story, starting off 2024, 2025 is looking really similar so far, at least. Really not much of an expansion. Last time we had the pop in VIX was January 24th. What happened? Was that the news about the potential tariffs? It might have been.
Probably. That's right. Over the weekend. The inauguration. I think the inauguration was, I don't know, I guess it was 2 weeks before that. But yeah, I would assume that is that's tariff news happening.
So it does not seem efficient alone, as he says in the chat. But no, volatility has been a little disappointing, going into the year. I know, again, hopped on the Where Do I Start series with Tom back in, I'm over here talking about back in like it's that long ago, but like back in 2021, we were used to a 20, 30, 40 VIX even, and now we're kind of steadily trading around 16. So maybe it brought us back down to reality a little bit. And maybe that just wasn't, the correct expectations moving forward into the next years to come. But other than that, volatility's been a little bit dead. What are we looking at for the rest of the week? We can look and break down some of these earnings coming up, and then we can also break down, some market expectations for things like the NASDAQ market, because that's the one that I personally favorite and look at every single day. So let me pull up NASDAQ, and we'll look at some of the earnings. I'm not opposed to earnings. It's just one of those things where like, if I'm going to lose money, if I'm going to lose money on something, I want it to be on something that I'm confident and convicted in. Not that any other trade, you know exactly what's going to happen. But if that's going to be the case, sometimes with earnings, it just, kind of rubs me the wrong way a little bit. But I'm not opposed to it because I am sitting on a little bit of a cushion, Gus. And I got to take my hat off to Dr. Jim. When I had gotten into Microsoft and Meta, those both hit for way more than the usual risks that I even put on a trade. So that's why within these next months, I'm like, I have some reserved capital to expose into some of these earnings. So I'm not opposed, even though it sounds like I dislike earnings, Gus.
No, but, I mean, I'm inclined to agree. It's just that I have a general
back in my day,
a general sentiment of hate towards earnings, but I'm not afraid to play them every now and then. And I think you make a great point with, if I'm going to get burnt, I want it to be because of me. And with earnings, you can be so correct, and the market moves the opposite direction. Yeah, I mean,
great point.
Yeah, you can think. I mean, like I was just saying, you're fighting the market expectations as much as you are the analyst expectations. You can tell somebody outright a day in advance what the earnings numbers are going to be, and they still might not be able to properly trade that just because of how crazy things are.
No, completely agreed. You put that in a really good way. But before we get into more of the earnings here, let's talk about weekly expectations heading into NASDAQ. I know I talk a lot about NASDAQ. Kind of want to just show exactly what I'm looking at, what I'm going to be looking forward to for the rest of the week. Not that matters, not that the market cares, but this is something that I would like to happen here. Just a quick breakdown on what we have here. This white line is the point of control. So this white line right here is the previous week's price level where there was the most transactions that occurred over last week. So that's what this is for this week. This is derived from a volume profile. I know we have the volume profile tool over here. Maybe we can have another segment one of these days where we kind of break down volume profile and what it's built off of. It's a distribution of volume. With Tasty, especially a lot of the research, we use a lot of distribution curves. We like the data that comes along with them. So we have that bell curve whenever we use a volume profile. So I think a lot of the Tasty community could grow fond to it because, again, we're very familiar with bell curves. I wanted to real quick plop this up on there, but we'll do it another time. But essentially, that's what it is. And essentially what this highlighted zone that I have off here is what we'll call the value area. And that's going to be that one standard deviation in the middle of the bell curve. So this is where 70% of the trading activity occurred from last week. And one thing that I kind of like to keep an eye on is, we talk a lot about price discovery as well. And I know to each their own, people, view the markets through different lenses, have different perspectives. But one thing that I'll be looking out for, at least this week, if we start to see a lot more price action traded above this value area high, that's what it would be, the VAH, the value area high, I would look more for longs, directionally speaking. Or, if we start to get a lot of weakness around the value area high, we could probably get a short and then short back down to the point of control. And that was pretty much the trade idea that I had taken for today. But that would be the expectations for me. I hope we can get some type of upside as well. I'm kind of in a weird position because I sold the put spread, I sold the call spread. These are really close to each other as well. So the best case scenario, I'm going to break even on one of them and probably profit, a decent amount on the other. But one is definitely be break even. I'm not going to be able to suck out the premium on both sides of the market just because those are so close to each other and they're sitting at the point of interest or area that I'm pretty much looking for. So, hey, we get above this value area high and start trending to the upside, I'm going to take that as a sign that the Broncos are going to the Super Bowl next year. So hopefully that pans out. That's what we're looking at right there. I don't know if you have anything else you're kind of eyeing for the rest of the week, Gus, but we can find some more tickers here.
How's your delta on that position holistically? I mean, which direction burns you worse?
So it's gonna be, and we can even pull this up. It's gonna be the it's going to be the. Oh, that's a good question. Well, because I'm not gonna hold this until Friday and let it expire. I know I did that the other week, and I was like, "Where did my buying power go on my account?" I had 100 shares of QQQ. And I was like, "I'm gonna just exit these beforehand." So I'm not gonna hold it all the way till expiration, but I will say. I did collect more premium when I sold the puts because, again, I sold that one a little earlier. I sold the call spread today, so I'm not getting as much premium as I, would have if I would have just put them on at the same time. So, if the market just goes up maybe $1 or two, and then if you just hold it there, that would be great. But we'll come back on Thursday and we'll see how I manage this. I think when we come back Thursday, this will be a good example on how we can manage something like this, and depending on what the market's doing, because one thing that's not going to change, especially this week, is this value area and the levels that we're looking at right now. In terms of, like I said, back to the point of control from value area high. But yeah, no, these are going to be the same levels we're looking at for the rest of the week. So we'll come back here and manage this together, Gus. But you definitely collected more credit on that put side. So we'll see what we get there. And then again, my longer term opinion on the overall market for the next at least month and a half is to the downside a little bit. So that's why I do have that SPY position on there. Sometimes I'll juggle between QQQ or SPY. Oftentimes it's just going to be whichever one is giving me more of a sufficient amount of premium to take in. So I'll use QQQ SPY. I don't have a preference, but when it does come to the futures market and the way that these markets move, I do prefer NASDAQ. ES is a thicker market. I would say if, directionally speaking, if anyone's trading futures, if you want a little bit of a slower paced market, you don't really want, fake outs at highs in a lot of these wicks. And, you might gravitate a little bit towards the S&P 500 because it is a thicker market. And even though it's a slower moving market, the point multiplier on ES, will make up for that as well. But I think they they have two different personalities. I see them as like brothers, or same but different. Same but they kind of have a different personality. So that's how I kind of view NASDAQ and ES. Is this looking at volume or time and price? Is this looking at volume or time and price? This is looking at all the above. So I mean, if we're really thinking about it, we're taking the volume from the volume profile. So that's the distribution of volume. So we're using volume in that sense. Time and price, you kind of mentioned the TPO, which is called the time price opportunity grumpy Mike. Maybe you've used that before, but that would consider time a little bit more. Time isn't as much as a element in this type of trade as it would be in others. But, if you consider using time as the previous week's data, right, again, this volume profile, this distribution of volume is taken from all of last week's trading activity. So that's the time window as well. I mean, I guess you could incorporate time within that as well. But anyways, we got a couple minutes here left. What other tickers are on the board, Gus? So we can go ahead and pull up some of these earnings with this watch list as well.
Yeah, absolutely. Earnings.
Lulu? Oh, no, never mind. Not Lulu. You a fan of Lulu? You like Lulu? You like some Lulu pants? They have some good quality.
Yeah,
I know Nick.
I was going to say.
I know last time I see Nick is always wearing these Lulu pants.
Yeah, you mean like IRL?
You have to have some. You're the golf. Yeah, you give me that golfer kind of. I feel like you got to have some Lulu pants.
I do golf. Yes. I prefer Bird Dogs, which is essentially the same product, just a different brand. That's where I gravitate. I do have two or three pairs of Lulu shorts and pants and stuff, and they make very high quality stuff. Bird Dogs is just slightly cheaper, but I may have to shift my allegiances soon because they cannot restock this site. I've needed new shorts for a long time, and they will.
So they're popping. They're doing well then.
They're
doing well then. Okay.
Yeah, the restocks are a big deal, and they don't like try to create exclusivity. Like it's not like a sneaker drop where they sell out in 5 seconds or anything. They just genuinely don't have the production to keep up with
high demand right now.
Yeah, exactly. Okay. So I might have to shift gears to Lulu, but I know Lulu and Viore. I've only heard good things.
Yeah, no, absolutely. I mean, I've heard both. But we got FedEx coming up. IV rank not looking very attractive. We're gonna actually just scrap that one. Adobe, shout out. I know Adobe was working on a lot of AI features. AI was like the talk of the town. You put AI in your earnings report, your underlying popped off. And I know Adobe was doing that a little bit as well too. But I don't know what type of progressions they've made in terms of the AI, sector of their software. But they're presenting earnings here, March 12th after the bell. So we'll see what we get there. We have Costco. Costco.
Sorry, go ahead.
What's that?
No, I was.
No,
just
go ahead.
Say,
What's that, bro?
Something else I haven't gotten to mention on air yet is the Texas Stock Exchange. I'm sure this has been highly discussed, but the TXSE and Y'all Street is coming in full force. They have officially filed as Y'all Street.
What street?
Y'all Street, like.
Of course,
howdy, y'all.
That is just too on brand.
yeah, exactly.
It was too on brand.
Well, it was a meme when they
obviously done on purpose, right?
Of course, yeah. When they were originally filing with the SEC, it was a meme. Everybody was calling it Y'all Street, and then those crazy people actually went and did it. They formally filed that way. So I'm wondering, as I sit here and look at the earnings for tomorrow, and they're listed all as NASDAQ or NYSE, if that's going to say TXSE or if it will say Y'all. But it's going to be one or the other.
I guess we'll find out. I mean, you're from Texas. You'll be the first to let us know. So let us know.
I will.
But Lone said AI is so 2024. AI.
It's true.
I know. I think
they patched the glitch where you can just say AI and send your stock price up 10%. It's patched.
It was a glitch. They did. That's the best way to. Anybody under the age of 30 watching this, put that in Gen Z terms. They patched it. It's patched.
It's patched. Yeah. The new thing now is and it's kind of getting patched with the weight loss drugs too. That's what I've said for a long time, that saying GLP-1 was like saying AI, but in the pharmaceutical space, and that's starting to get ironed out a little bit as well.
I feel like those weight loss drugs. I feel like those will always. I think they're gonna have their cycles. Anything related to health, nutrition, fitness, weight, especially weight loss. I feel like is going to be a sector that's going to be around and pop off forever. I mean, we got Nutrisystem. I just remember, I can see the commercials in my head right now. I feel like they're always going to be trying to develop some pharmaceutical companies trying to develop something at all times.
Yeah, it's just, I do just think it's ever improving. I mean, this new stuff is just so easy.
Good point.
That's the appeal. I mean, Nutrisystem, you had to sacrifice your good food. Now that's not a thing anymore.
This sounds crazy. It does sound crazy. No, other than that, we'll take a look at some other earnings another time. And again, we'll come back here on Thursday. And we can talk a little bit more about the volume profile, just see how NASDAQ is going to play out for the rest of the week. I think we actually have a really nice slot, run in the beginning, one towards the end of the week. So we'll always come back, see how some of these earnings played out, see how the overall indices played out, and kind of just go from there and manage our positions. But anything else you want to add before we're out of here today, Gus?
No real closing statements. I'm a FedEx hater. I hope they donk. I guess that would be my closing remark.
FedEx hater.
Yeah, I worked for UPS for 4 years, bro, man. Yeah. FedEx, no. I got allegiances. I got allegiances back in Texas. I can't be switching teams now. Don't ship your stuff FedEx, everybody. Yeah. That's my promo.
I hear you. Drugs rotate down your decks, Hims still up, weight loss. Oh wow, I almost read that out loud. Anyways, today is gonna wrap up the segment. Thanks for taking the time to hang out with us today. We'll be back here at the end of the week, give you a little bit of an update on the NASDAQ market, some of the indices, and we'll talk a little bit about how these earnings are gonna play out. But that's gonna be it. Stay tuned for more, and we'll catch you guys next time. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
no.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. It was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
On
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm. Okay, I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right.
I know it's on there.
It's warm.
No, I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Do you want to be KFC's friend?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good. Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983.
Yes.
It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
What happens when 2 titans of trading come together to harness the power of their prowess? Yes, let's watch these 2 dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.